So good day, professional students. You are welcome again to our past questions series on financial reporting. Today we'll be looking at the question from November 2014 diet. And in line with our practice, I always tell you that whenever you are faced with a question in the exam, that the first thing you want to do is for you to look at the requirement of that question. And which is the first thing we are going to do in solving this question. So we will be looking at the requirement of this question. And what is this question asking us to do? Here, the question is asking us to prepare a statement of cash flows for Usman PLC for the year ended 31st December 2013 in accordance with IAS 7 using the direct method. So this question is asking us to prepare a statement of cash flows using the direct method. And that is what they are asking us to do. Now, we know what we want to do is to prepare a statement of cash flows. Therefore, if you have really studied for the exam, you must have mastered and know the techniques that would be used to tackle a question on statement of cash flows. And really, we're going to be looking at that in this video. So let's read through the question. The question says that Usman PLC statement of profit or loss and other comprehensive income for the year ended 31st December 2013 are as follows. So we were given the statement of profit or loss and other comprehensive income of Usman PLC. And we were also given the comparative statement of financial position as at 31st December 2013, 31st December 2012, and they gave us the changes in financial position. The changes. Then we're now given some additional information. And the additional information given to us were one, the plant which had a carrying amount of 20 million was sold for 28 million cash and new equipment was purchased for 100 million. Also, this says that intangibles valued at 30 million were acquired for cash and borrowings of 20 million were made during the year and received in cash. We're told that dividends paid in cash amounted to 100 million. Okay, those were the additional information given to us. You need to understand that when you are required to prepare a statement of cash flows, you could either be required to do it using the direct or indirect method. This question requires us to do the direct method. And you need to know how to tackle it. You need to know the steps to follow in tackling it. And the first thing you do, really, for the direct method, is for you to have your format. It's for you to know where you start from. And where we are going to be starting from is the operating activities. And that is the area of distinction between the direct and the indirect method. But before that, let's critically look at this additional information. The additional information one states that plant which had a carrying amount of 20 million was sold for 28 million cash and new equipment was purchased for 100 million. What that is telling you is this, that part of the plant was disposed of. It was disposed of for 28 million. And new equipment was purchased for 100 million. Those will have impact on your statement of cash flows. And that will be this 28 million and 100 million. So that intangibles valued at 30 million were acquired for cash. That will also have impact. They made borrowings during the year and received in cash. It will also have impact. And dividend was paid. It will also have impact. So they give us like real straightforward information. And when you are preparing a statement of cash flow using the direct method, it's a statement of financial position given to you. and the statement of profit or loss given to you. Using the direct method, you have to pick each item within the statement of profit or loss, item by item, and you check each of those items for non-cash items. And the remaining cash item is what you transfer to the statement of cash flows. And that's the approach we're going to use here. We're going to pick each item one by one, and we're going to extract out the non-cash element, leaving the cash element that would be recognized in the statement of cash flows. So let's go and have our statement. So we are preparing this statement for Usman PLC. You must have the name of the entity first, it's very important. Then you have statements of cash flows. For the year ended December 31st, 2013. Okay, let me see the way the statement is presented. The level of rounding off, it was in thousands, which is exactly how I will present my solution, in thousands. So the first item here will be items of operating activities. And the item of operating activities are the core activities of the entity that constitute their primary line of operation. And these activities, the cash items relating to operating activities, you would determine them from the statement of profit or loss. So we'll go on straight to the statement of profit or loss now and start picking it line by line, item by item, and extracting a cash element out of them. So the first item we have here is revenue. And as given in the statement of profit or loss, our revenue is 1,600,000. What we need in the statement of cash flows will be the cash that was actually received from customer. And looking at revenue, we need to ask ourselves, is there a portion of this 1,600,000 that has not been received? Is there a portion that has not been received? Even if there is, how are we going to know? Because we need to know if there is any portion of the revenue that has not been received, because we need to extract that out. We need to remove that because it is non-cash item. And the balance is what we will take to the statement of cash flows. And how do we know that? The way you know it is that when you sell to a customer on credit, that means that customer has not paid. That receivable, that customer that has not paid, is always represented by a trade receivables. So you will go into your statement of financial position and see if you have a trade receivables. And from what I can see here, there is a trade receivables, which in here was referred to as account receivables. And this account receivables, at the beginning of 2012, it was 140,000. And at the end of 2013, it was 158,000. The question already gave us the movements. That this trade receivables has increased by 18,000. That means the trade receivables that relates to the current reporting period is this 18,000, because at the end of last year it was 140. It only increased to 158 in this current reporting period. Therefore, out of our revenue of 1.6 million, the portion that has not paid is this 18,000. So if you remove this portion that has not paid or that we have not received money from, then we'll be left with the portion that has paid. Okay? So, if we do 1,600,000 minus 18,000, I'll be left with 1,582,000. Please bring out your calculator. Bring out your calculator so that you can follow me. It's important you understand this deeply. Okay. So, I start with my revenue and I've extracted the cash element out of it. And it leaves me at 1,582,000. And that cash element will represent the cash receipts. Cash receipts from customers. Cash receipts from customers. And it is 1,582,000. Okay? So, if you understand what I've done with this revenue, for me to get cash receipt from customers, then congratulations. Because that's the approach we're going to use all through. That is it for statement of cash flows. That is why, at times, the standard calls statement of cash flows statement of changes in financial position. Because that is what it is. Okay? So now, let's go back to our question. And in here, the statement of profit or loss. The next item I have here is interest income, and it is 10,000. From this interest income, what we need is the cash element of it. If there is any portion that is not paid or that has not been paid, it will show in the statement of financial position as interest receivable. As what? Interest receivable. So let's see if you have any interest receivable in our statement of cash flows. Yes, we do. We really do have an interest receivable. Please look at it very closely. And this interest receivable, at the beginning of the year, it was 300. At the end of the year, it is 200. So that means our interest receivable has reduced. So, what that means is that we have received, for this current period, we have received additional 100. We have received additional what? Additional 100 because it has reduced to 200. So that means these 10,000 that we have in the statement of profit or loss, none of it is owing. As far as this current reporting period is, it will be 10,000 plus the 100 we received. So if you add 100, that will give me 10,100. So I'll go and have interest received, which is 10,100. But you need to ask yourself a question. When you have interest received, when you receive interest, this interest, should it be operating activities? That is it from the primary line of operation of the business, or should it be investing activities? That is, if you are receiving interest from an investment, maybe you bought a financial asset, maybe you gave a loan to somebody, and the person is now paying you interest. That should be in investing activities. You see, ideally, interest should be presented as part of investing activities. But let's say you have money in the bank. Money in the bank like a fixed deposit. And the bank is now giving you interest on it. They are giving you interest. And you are using it as a source of income as an entity. That in addition to the revenue you make, you want to be making money from such angle also. So you have made it part of your business as an entity. So that could come in as an operating activities because you have made that source of income a primary line of operation of the business. But in this case, we were not specifically told, whether this interest is relating to a long-term investment or a short-term investment. We were not told, we were not given the detail in this question. So what should we do? So you can either treat it as operating activities, or you can also treat it as investing activities. But so that you won't make mistakes, so that you won't forget it, just treat it treat it early in the question so that you know you have treated every line item, because you might say you will come back at it, then you forget. For that reason, I'll be putting it as part of my operating activities. So my interest received would be 10,100. Okay. Then, after my interest received, the next item here is gain on sale of plant. Gain on sale of plant, which is 8,000. And that gain on sale of plant will relate to this additional information given, that a plant was sold which had a carrying amount of 20 million and it was sold for 28 million. You will see they made a gain of 8 million. That is that 8 million. That 8 million is an accounting gain. It's not relating to cash. What relates to cash is the amount we received when we sold the asset. For that reason, this gain on sale of plant is a non-cash item and will not be treated in the statement of cash flows. So we're going to ignore this gain on sale of plant because it is a non-cash item. You get it? Okay. Having determined that, then the next item is cost of sales. And the cost of sales is 960,000. And if you know how to determine cost of sales, it is simply determined as opening inventory plus purchases minus closing inventory. Opening inventory and closing inventory are non-cash items. They are inventory. So we're left with purchases. And in that purchases, if it has been fully paid, you will confirm that in the statement of financial position and see if you have any trade payables. If you have trade payables, that means there is a portion of it that has not been paid. And the portion that has not been paid relating to this current reporting period, we need to remove it. So that what we will have would be the portion that has paid. Okay? The ones that we have what? We have paid. Let's go and do the analysis in my workings. I'll do my workings on this side. So I'll have my workings. So now I'm looking at the cost of sales. And for my analysis, I said the cost of sales is the opening inventory plus purchases minus closing inventory. That will give me my cost of sales. So, what's my opening inventory in this case? So this is my inventory. My opening inventory is 130,000. My closing inventory is 140,000. So I have 130,000. And jacket, I will have 140,000. And my cost of sales, given in the question, was 960,000. My cost of sales was 960,000. So, I don't have my purchases. So, I'll simply get my purchases as the balancing figure. Right? So, what would that give me? So, if I do 960,000 plus this one, I'm trying to work back, plus 140,000. That will give me 1,100,000 as my cost of goods available for sale. Because if you add this opening inventory plus purchases, it should give me COGAS, cost of goods available for sale. So 1,100,000 is my cost of goods available for sale. So if I deduct 130,000, then I will get 970,000 as my purchases. So let's give it a trial. Let's do 130,000 plus 970 minus 140, 960. Okay. Now, these purchases, is it purely cash, or is there a portion of it that is non-cash? To get that, you will go to your statement of financial position and see if you have any trade payables. And as God will have it, we have. See, there is an account payables. And this account payables, at the beginning of the reporting period, it was 84,000. And it increased to 90,000. So it increased by 6,000. Which goes to show that the reporting period, or the account payables for this current reporting period, is 6,000. So out of the 970,000, 6,000 we have not paid. We have not settled our supplier 6,000. So if you deduct 6,000 from the 970,000, this 970,000 we got here as purchases, okay, you deduct 6,000 from it. You'll be left with 964,000. And that 964,000 represents the portion of the purchases that has been paid to the supplier. So we're going to have that as cash paid to suppliers. Cash paid to suppliers. And it is 964,000. And because it is an outflow, to be jacketed. Okay? To be in jacket. Okay, let's go back to the question. We pick the next item. And the next item here is wages and salaries. And wages and salaries in this current reporting period was 240,000. And that is the amount of wages that was expensed. Have we paid everything? Have we paid the whole of this 240,000? We will confirm it from the liability section of the statement of financial position if we are still having any outstanding wages and salaries. So we'll go and look at our statement of financial position. And only we have wages and salaries payable. So there is still some portion of that wages and salaries that has not been paid. And how much is it? This is how you get it. At the beginning of this period, it was 8,000 that we were owing. At the end of the period, it has increased to 10,000. That means we now owe. What we owe, what made it increase is what we are owing in this current reporting period, which is 2,000. That is, out of the 240,000 wages that we accrued for, or that was expensed in the statement of profit or loss, 2,000 we have not paid. So what we have paid is 238,000. And that is what we would recognize and transfer into the statement of cash flows. So wages and salaries paid wages and salaries that has been paid is 238,000. Having determined that, we'll go back to the question and pick the next item. And the next item we have here is depreciation on plant and equipment. Depreciation is non-cash. It is a non-cash item. So it will not be recognized or presented in the statement of cash flows. So the next item here is interest expense. And the interest expense is 8,000 as reported in the statement of cash flows. And this interest expense, have we paid everything? For us to know, we will go to the statement of financial position to see if you are still owing or if there is any accrued interest. So I go to my statement of financial position, to the liability section straight, and see if there is any accrued interest. And yes, there is an accrued interest. And that accrued interest, at the beginning of the reporting period, it was nil, but now it is 400. So the accrued interest for this current reporting period is 400. What we are saying there in essence is that this 8,000 that is reported in the statement of profit or loss, 400 has not been paid. 400 has not been what? Has not been paid. So we're going to remove 400 from that 8,000 and we'll be left with 7,600. And that 7,600 shall represent my accrued interest paid or the interest expense paid. So my interest expense that is paid is 7,600. Also, the same way we made the decision for interest received, that should it be operating or investing. The same thing applies for interest expense. Should it be operating or should it be financing? Because if you borrow money from the bank to run your business or to finance a capital project and you are paying interest on it, such interest is a financing activity because you are paying that interest because you borrowed. However, if you have money in a bank, there are many charges the bank usually exacts on your account as an entity. They give you SMS charges, you pay stamp duty, you pay commission on transaction, you pay series of interest. If this is that interest, then it could be an operating activities item because you did not borrow money. It's just a major part of your operation because you are using a bank and the bank is charging you. For that reason, you are paying interest. If that is the case here, then it will be treated as operating. But the question didn't specify what we are looking at. They didn't tell us whether this interest relates to bank charges or this interest relates to borrowings. We were not told. So you are free to assume as you want. Okay? You are free to assume. But we can confidently say that since there is long-term borrowings in the question, so we can say that this interest will relate to that long-term borrowings. We can say that. But we can even ignore if you want. It won't penalize you for that. So if you have the interest, which I have as 8,000, I deduct my 400 and we got 7,600. So we can treat it as financing. Okay, if you won't forget. So let's treat that as financing because of that long-term investment. But if you treat it as operating, you are fine. Alright. Hope we won't forget that, okay? Because we have already determined it. The cash element, this interest, the cash element is 7,600. Let's just put it as operating so that we won't forget. So interest expense paid $7,600. So the next item here is other expense. And it is 152,000. 152,000. So we need to make decision as whether it has been fully paid or not. And for you to do that, you will go to your statement of financial position and see, are we still owing any of these other expenses? So we go to the liability section of the statement of financial position. And as we have it, there is an other expense payable, which at the beginning of the period was 6,000 and then the end is 3,600. So it has decreased by 2,400. So out of that 152,000, okay, out of these 152,000, it means that we have settled everything because we are not even owing anything in this current reporting period. We even settled out of the one we are owing in the last reporting period. So we're going to add, because it decreased by 2,400. So we are going to add 2,400 to show that we have settled that too. So 154,400 will represent the other interest paid, other expense paid. And it's 154,400. Okay. So after other expense paid, going back, then I'm now at my profit before tax. So in the next video, I will start with my income tax expense. Then I will finish up with the operating activity section. So thank you very much. Let's continue from the next video. Have a good one.